Do you feel like your money's disappearing every single month and you have no idea where it's going? Well, you're not alone. Almost 60% of Americans live paycheck to paycheck. But here's the good news. You can change that in just 6 months. I'm gonna walk you through a step-by-step plan that's helped people just like you control their money, get out of debt, and finally build peace in their finances. If you stick with me until the end of this video, you'll have a real plan to stop stressing out about money and start making it work for you. Let's go. Let's be honest, you can't fix what you don't face. It may be hard to look at the truth of your financial situation, but it's also enlightening. So in month 1, you have to understand your starting point. Start by writing down and adding up the value of everything you own. This includes your house, your cars, any valuable items you have in your house, and retirement and non-retirement investment accounts. Then you want to add up and write down everything you owe. This includes your mortgage, car loans, credit card debts, student loans, and pretty much anything that you owe money on. Then you take the value of everything you own minus the total value of everything you owe, and that's your net worth. That's your starting place. Then you ask yourself, what do I want my life to look like in 5 or 10 years? Do I want to travel more, get out of debt, get a house, retire early? What exactly is that vision for your life? Once we understand where we are today and we understand where we want to end up, then we can build a strategy to get to that end vision. And a key component of that strategy is your money plan. You're gonna wanna do something called a zero-based money plan, which basically means that every dollar of income you earn has a job and a specific purpose that it's gonna be spent on, whether that's giving or saving, paying off debt, or taking care of monthly expenses. We don't even want a single dollar that you earn being spent on something that's not important to you. You wanna break down your money plan into these parts: your income, debt, essential expenses like food, rent, utility, and transportation, non-essential expenses like takeout and streaming services, and saving and investing. And then before the next month begins, you want to list out everything you need to spend money on under each of those categories, as well as how much you plan on spending on those items. Then when the month begins, at the end of every day, you want to track and update how much you've actually spent overall for each of those items so far for the month. If you're new to doing a zero-based money plan, I have a free template in the description that can help you with this process. Now, month 1 is all about clarity and goals and committing to the process. It can take months or even years to fix your finances. So you have to decide in your mind, you know what, I'm serious about this. If you're not all in, nothing's gonna change. Set real targets and clear deadlines. And most important, find out your why. Your why is what's gonna keep you going when it gets hard. Are you tired of your family struggling to pay the bills and want to change things so they can live a better life? Do you want your kids to know what it's like to travel the world and explore different cultures? Do you want your wife to be secure in knowing that she'll be able to retire one day and still enjoy life? Whatever that why is for you, month 1 is where you need to figure that out. Now that you got a plan for your money, in month 2, it's time to build space in your finances. We call that margin. We start building margin into our finances by cutting non-essential stuff like subscriptions you don't use, eating out, online shopping, for example. We focus on this first because it's quick. You can immediately cut a lot of expenses that you don't need in just one day. And be honest, you don't really need all of that stuff right now. What's more important to you, fixing your finances or going out every other day? That's a choice that you're gonna need to make. Now, this doesn't mean you can't do anything, but it does mean you wanna cut back as much as possible so that you can quickly move your finances in the right path. If you can't cut something completely out, cut back as much as you can. So for example, if you have 6 different streaming services, pick the cheapest one or the one you use the most and keep only that one. Instead of eating out every day for lunch at work, pick one day a week to eat out and the rest you pack a lunch. This is the month that you'll need to make up in your mind that your lifestyle will be cut back in the short term so that you can build a better life in the long term. In month 2, you'll also want to set clear boundaries with your family and friends. Let them know that you're doing things differently now. Say, hey, I'm working on something right now. I'm not spending like I used to for a while. So please don't ask me to go out, loan you money, or go on vacation right now. This isn't you being mean, it's you being responsible. And this is tough to do because many times they will fight you on this. but stick to your guns and establish boundaries in your relationship. It's very hard to cut your expenses when everyone else is deciding how you're gonna spend your money. Also, this month, you wanna start saving a small emergency fund of around $1,000. This is gonna be your safety net for small emergencies like a flat tire, fixing a busted water heater, or having to go to urgent care. You'll want to save this as fast as possible so you can move on to the next steps. Try getting this completely saved in month 2. Cutting your expenses should quickly get you to your $1,000 emergency fund. And if not, maybe you can think about doing something like a garage sale. Do whatever you can to save up this emergency fund fast. And of course, you want to keep tracking every dollar in your money plan to make sure you aren't spending more than you planned. It takes time to get the hang of things, so just know you'll probably make mistakes for the first few months. And that's okay. Now, cutting expenses helps, but making more money helps even more. So month 3 is all about building margin by growing your income. A lot of people can quickly earn more money than they realize, but they never take the time to see how. So ask yourself, can you pick up a few hours at work? Can you deliver groceries on the weekend? Can you sell something that you don't use? If you've been at your job for 5 to 10 years, maybe think about updating your resume and see what's out there. According to a 2023 Pew study, workers who switched jobs saw 9.7 higher pay on average. But you'll never get that if you never see what other jobs are out there. Increasing your income helps you make space in your finances so you can breathe a little bit and focus on your goals. And again, keep tracking and updating your money plan. It gets easier every month, and month 3 is really where you start to get the hang of things. You should be able to start gauging what's realistic or not and adjust your spending categories to fit your lifestyle. Most items in your plan won't change from month to month, but you will have 1 or 2 annual expenses that you realize you need to account for, like birthdays, taxes, and car registration, for example. Don't let those things take you off guard. And now that you've cut your expenses and you've increased your income, you should start to see extra room in your money plan to move on to month 4. But before we continue, go ahead and hit the like button. It helps us grow this channel, so we'd really appreciate it. Month 4 is the month we really want to start focusing on paying down debt. You can do this in earlier months as well if you can, but now that we've cut our expenses and grown our income, it will be much easier to start paying down debt. A lot of times people are living paycheck to paycheck, and even when they start doing a money plan, they see that there's really no room in there to make a lot of progress. So cutting your expenses and growing your income is important to be able to make progress paying down debt. And this includes all debt except your mortgage. You can worry about paying off your house later, but right now you just want to focus on non-mortgage debt. This includes your credit cards, car loans, medical bills, personal loans, and student loans, for example. And yes, I said student loans. A lot of people give up hope that they will ever pay off their student loans, but most people who get serious about paying down debt pay off all their debt, including their student loans, in just 2 years. I use the debt snowball method to pay down my debt. In the debt snowball, you list the debt smallest to largest, regardless of your interest rates. You pay minimum payments on all the debts except the smallest one. For the smallest one, you throw everything you can at it until it's gone. Once that debt is paid off, then you move to the next smallest one, and then the next smallest one. And then before you know it, all your debt's gone. And again, we're still tracking our spending on a daily basis and sticking to your money plan. Month 5 is where you really want to stay focused and stay on course. This journey isn't easy, and it can be hard to stay motivated. After a few months, it can be easy to start to lose steam. So here's what you can do. Watch debt-free screams on YouTube to stay fired up. You'll hear different stories from every income, demographic, and walk of life. If they can do it, you can do it too. You'll want to continue picking up extra work if you can and focusing on making more income as well. Try fasting TV and social media if it isn't related to paying down debt and increasing your income. A lot of times it can be demotivating to watch all your friends and influencers eating out all the time and having fun and going on extravagant vacations when you're grinding at work and cooking spaghetti at the house. It may not be the most fun month, but it's not forever. It's sacrificing in the short run so you can live the life that you have envisioned in the long run. In month 2, we looked at the non-essential expenses. This month, we want to look at the essential expenses as well and see what can be negotiated down. So shop around for affordable car insurance. A lot of times people can cut their car insurance in half when they shop around. Call your cell phone and cable bills and see what can be negotiated. You also want to see what debts you can negotiate down with your creditors, like credit card debts and medical bills. If you're renting, look at your contract to see when your lease is up and if you can find a less expensive place to rent in your area. See if you can sell your car and get something cheaper. Cars by far are one of the biggest barriers to financial success. People's car payments are completely ridiculous. If you have a $700 car payment, that's probably killing your finances. Get rid of the car and get something cheaper. Again, anything and everything you can do to get out of debt. That is the focus. If you finish paying down debt by this point, you want to then focus on building a 3 to 6 month emergency fund. This is 3 to 6 months of expenses, not of income. And again, continue to track your expenses and stick to your money plan. Now, after 5 months, you've made huge progress. Now let's make sure you maintain that progress. Month 6 is all about where you want to focus on building systems and processes to keep maintaining that progress. This includes automatic bill payments for everything that you can. You want to spend as little time as possible messing with bills and instead use that time to focus on growing your income and your wealth. Many people don't feel comfortable with automatic bill payments, but this is usually only because they don't have a detailed money plan or they have no buffer in their bank account. You should either have several $100s extra in your checking account to make sure that you don't overdraft, or you should have an overdraft account. When doing a zero-based money plan, that doesn't mean your checking account needs to actually go down to zero. It just means that all the money that comes in for that month should be allocated and spent on expenses, debts, savings, or investing. Even if you look at the plan at the end of the month and you perfectly estimated and spent every dollar that came in exactly how you wanted, you still should have a few $100s in your checking account. Now, personally, I like my checking account to reflect exactly what my money plan reflects. So instead of a buffer, I use an overdraft account. My bank doesn't charge for overdraft transfers, so in the unlikely event that I go over my plan, it will just pull from that overdraft account and I can replenish it after. But either of these methods will work. You also want to put in place spending controls to make sure you don't go over budget in the future. Use the envelope system for categories you tend to overspend on, like groceries and eating out. The envelope system basically just means putting cash for whatever budget item that you have. And once the cash is gone, you're done spending in that category for the month. So if you're planning on spending $200 for eating out that month, you put $200 in an envelope labeled eating out, and once the money's gone, you can't eat out anymore. This ensures you don't spend more than you were supposed to. You also want to automate saving and investing. So if you are working on your emergency fund, after you get paid, you want to make sure money is automatically moved into your emergency fund savings account. If you finish saving for your emergency fund and are starting to invest, make sure you set up automatic transfers into your retirement and brokerage accounts. If you have a 401k at work, make sure your 401k contributions are automatically being deducted from your check. Anything and everything you can do to ensure money's being spent in a wise manner without you having to think about it or having to make hard decisions about it is a good idea. Now, look at what we've accomplished in just 6 months. You've made a plan, you've cut back, you've made more money, you've crushed your debt, you started saving, and you've built systems in place to keep winning. You should be in a much better place than you were before. If you're ready to get personal one-on-one help, check out my coaching programs linked in the description.